Ladies and gentlemen, good day and welcome to the Technoplast Limited Q3 FY24 earnings conference call hosted by PhillipCapital India Private Limited. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on the date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participants' line will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikram Suryavanshi from PhillipCapital India Private Limited. Thank you and over to you, sir.
Thank you, Manuja. Good afternoon and very warm welcome to everyone. Thank you for being on the call of Technoplast Limited. We are happy to have the management with us here today for question and answer session with the investment community. Management is represented by Mr. Bharat Kumar Vagheria, Managing Director, Mr. Raghupati Tyagarajan, Full-Time Director, Mr. Sandeep Modi, Senior Vice President, Accounts and Corporate Planning, Mr. Hemant Soni, Vice President, Legal and Corporate Affairs. Before we start with the question and answer session, we'll have opening comments from the management. Now, I hand over the call to Mr. Bharat Vagheria, sir, for opening comments. Over to you, sir.
Yeah. Thank you for the introduction, Vikram. Good afternoon to all of you. We are here to talk about our results for the Q3 and 9-month FY 2024 and outlook for the rest of the year. We are pleased to announce a robust performance for Q3 FY 2024 with a year-on-year volume growth of 20%, revenue growth of 17%. The value-added product segment witnessed a growth of 25% year-on-year, driven by good demand of intermediate bulk containers and the composite cylinder, while the established product grew by 15%, backed by improved performance of polyethylene P5 businesses. EBITDA and PAT margins also witnessed a significant growth of 26% and 50% year-on-year respectively, driven by increased share of value-added products with the good order book positions for CNG products and P5 coupled with the stable demand for core industrial packaging business including IBC. We are confident of achieving our target set for the full year. Coming to the financial number, the results are already announced. I will just walk you through some of the key financial and operational highlights. On a consolidated basis, Q3 FY24 revenue grew by 17% as compared corresponding quarter last year. Q3 FY23 and even 11% up as compared to previous quarter of Q2 FY24. During the Q3 FY24 on a consolidated basis, net sales is to 1,327 crores as against 1,131 crores last year. EBITDA 192 crores as against 153 crores last year. Profit after tax 92 crores as against 61 crores last year, which I have mentioned to you 50% up compared to last year. The highlights for the quarter compared with the corresponding period, net sales increased by 17%, India 19%, overseas 14%. Volume increased by 20%, India 22%, overseas 16%. EBITDA increased by 26% and PAT increased by 50%. EBITDA margin was 50 basis points higher, which we got it 14.5% as against 13.5%, increased by 100 basis point margin improvement due to increase in revenue shares of the value-added products, cost control and increase in the capacity utilization. During 9 months FY24 on a consolidated basis, we achieved turnover of 3,621 crores as against 3,100 crores last year. EBITDA 508 crores as against 411 crores last year. And I am pleased to tell you that profit after tax is 280 crores, 218 crores as against 155 crores last year. And I am pleased to inform you that last year our whole year profit was 219 crores, which is achieved in the first 9 months itself. So remaining 3 months is the bonus for this current financial year. Key highlights for the 9 months compared with the corresponding period previous year: net sales increased by 16%, India 18%, overseas 13%. Volume increased by 18%, India 20%, overseas 15%. EBITDA increased by 24%, and in the 9 months also, consolidated basis increased by 40%. That is increased by 40%. In 9 months, EBITDA margin was 14.1% as against 13.3% during the corresponding period last year. Now, share of the business. Value-added product grew by 27% in the 9 months as compared to 9 months of the previous year, while established product grew 13%. The result of the value-added products is 26% of the total sales as against 24%. As you have seen, because of the increase in the percentage of value-added products, margin and EBITDA margin both are improving. Now, share of the India and overseas business, which is 65-35%, as against previous year also it was in 66-34. Little percentage-wise India has increased because India growth is higher compared to the overseas. Then total debt is reduced in the 9 months, which is stood at 745 crores as against 810 crores. Net debt as on 31st March 2023. So 9 months debt reduced by 65 crores, and as initially planned, that it will be reduced by more than 100 crores before end of this current financial year. The same targets will continue in the further period also. But another thing, I am pleased to inform you of ROC, because when your margin has increased, rate has increased, that ROC is, as we have promised earlier also, that ROC will increase by 1.5 to 2% every year. So as against last year, ROC was 13.5%, which is now increased to, in 9 months, it's a 15.6%. There's a 2% increase in the ROC. So, compared to last year, it is increased. 13.5%, whole year was 13.5%. In the 9 months, it is 15.6%. So, it's a 2% increase over the previous year. CapEx, 9 months, 144 crore, which includes rupees 63 crores towards the capacity expansion, reengineering, automation for the established product, which are always required on account of the maintenance, cost reductions, and to maintain the capacity. And rupees 81 crores towards the value-added product expansion, mainly for composite products and the IBC. Total capex full year will be in the range of, I am just reducing the target for the capex full year, will be in the range of 175 crores as against original target of 200 crores. Continuous focus on improving working capital cycle time and targeting to reach 90 days in the next 6 month time, being as against 112 days was in 2023. Consolidation of the overseas business. The board has approved and authorized, subject to due diligence, for the acceptance of the disinvestment of 50% business in Middle East on tap and cash-free basis for a valuation of around $25 million. I think you people can calculate 100% valuation is $50 million. The geographical agreed for the disinvestment contribute only 7.5% to the consolidated revenue. We estimate to complete this disinvestment transaction within a period of 90 days, including the due diligence period. The process, as per the direction of the board, and already shareholders' approvals are there for use for DAP reduction and benefit to the shareholders. The company has adequate resources available for expansion of the value-added products from the internal accruals. Now, in the last quarter, I have reported that company management has identified certain non-core assets for a valuation of 125 crores, which we are keeping ourselves target to become zero by March 2025. and therefore to initiate the first transactions of 26.5 crores have been agreed, and that transaction will be completed and for sale of the land and building in Southern region and completed in the 90 days time with the compliance of the local authorities. And profits from this sale of the entire core assets will be used for the debt reduction. A product under development towards the green energy for use in the city gas distribution, compressed biogas, CBG, and the automotive industry. Products under development towards the green energy include composite hydrogen cylinder, CNG cylinder for larger capacity, up to 250 and 350 liters, to make product more competitive, and other composite products also under development for use in the automotive industries like composite air tanks, hydraulic fuel tanks, etc. I would now like to open the floor to answer specific questions. Thanking you to all.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Jatin Damania from Swan Investment. Please go ahead.
Good evening, sir, and congrats on a good sort of numbers and finally achieving that what we are talking in terms of the divestment. So just wanted to understand, sir, this 7% contribution to overall revenue. So is it try to assume that margin for the value or the margin in the Middle East within the range of 13-14%, or is it lower? Because to understand the overall valuation on the EBITDA numbers.
Yeah, you are right. I think the margin in the range of 13 to 14% EBITDA, right? I think you want to understand the valuation, at what valuation it is done. It is very clear that it is in the range of 13 and 14%. And I mentioned to you in the earlier also, my overseas revenue distributed in the 3 regions. USA, we do 20%. Southeast Asia is around 50%. And Middle East around 30%. MENA region. Where Middle East is around 23%, 7% is North America. We have one plant in Egypt also. So we are talking about the consideration which is now only for the Middle East. That is in units in Dubai, units in Bahrain, and units in Saudi. So it is having kept apart, and that's the valuation considered is a 7.5% of the total revenue in consolidated revenue. Means 5,000 crores revenue if you take it in the whole of the year. So 7.5% of 5,000 around 350 crores. 350 crores approximately revenue. But please note that we are agreeing for only 50%. So balance 50%, our management will continue.
Mm-hmm. Okay. Yeah. So and the company will be operated as a joint venture and will be managing the entire operation, right?
Operating will be done because it's just initial stage. Yes, definitely, whatever way there will be joint venture agreement will be there in that country, and accordingly the operation of 3 countries will be looked after.
Okay. And sir, now since
as well the advice of the bankers.
Right. Now since 300 crores goes off the system, and for FY24 we will be achieving a target of 5,000 crores, which we have guided with an improvement in the margin. But if I want to look from the FY25, FY26 perspective, excluding the Middle East, so what is the revenue growth which we are anticipating because of the growth that we can see in value-added product as well?
Jatin, you know very well, as I think we are growing around 15%. So our target is 5,000 crores. Out of that, we will reduce only 175 crores. Okay, because the 50%. So 5,000 crores minus 175 crores, that is working out to 4,825 crores. So again, next year also will we achieve more than that. 15% growth is there.
Mm-hmm. And so the overall contribution from the value-added business or value-added products going
high? That will be very marginal effect. Value-added products is going to be continue as the value-added product sale is increasing. So contribution, which is currently how much contribution of value-added products? 26%. So that percentage is going to be continue because that has a very marginal effect. 7.5% divided by 2, 3.75% minus in the revenue will not affect much in the 100%.
No, sir, that's true. I'm not talking about, but just wanted to understand the overall increase in the percentage of the value added in the overall basket so that the improvement in the margin that we can see in the coming years.
Yeah, I don't think coming year target will be got achieved, and that's what we are estimating. 50% growth in across the revenue, EBITDA and PAT will continue, and even some basis point improvement in the margin, net margin will be there. As we have seen last year, whole of the year, the PAT margin, EBITDA margin was 13.5%, which currently we are targeting to reach cross the 14%, and we may estimate yearly maybe internally we are estimating 14%, but I think we cross that also.
Right. So last two questions from my side. And in the last con call, we were discussing that we will be targeting the auto segment from the composites. So any work on that? We have any update on the same?
It will be, but I tell you, as current, you know the capacity. We will catch up the automotive industry when expansion plan will be completed. Currently, I have already order book, at least for next 6 months order book is in hand. So when next expansion, which are expecting to do it in 2024-25, from that expansion, we will supply to the automotive industry. But as far as other composite small products like air receivable tanks, that is going to be continue.
Oh, okay. And so lastly, on the update on the LPG orders from other OMCs excluding IOCL?
That last order is continue, and some tenders are on the pipeline. So we'll also participate in the new tender, which we are expecting before March. So that will take care of the next year business.
Sure, sir. So I have a few more questions. I'll come back in a queue. Thank you and all the best.
Yeah, definitely. Thank you.
Thank you very much. The next question is from the line of Scientific Investing. Please go ahead.
Hello, sir. Congratulations for the great performance and also for taking the initiative for restructuring the whole asset. My question is around the second part. And if we look the initiative you have taken so that we can go balance sheet in terms of debt-free, we can invest that capital into, high growth, high margin businesses. My question is, if we look at the return on capital, if we look at the free cash flow, once we finish this exercise, how do you see our, the free cash flows growing? At what rate free cash flow will grow? Also, I understand our assets are little higher depreciating asset because I believe we spend a lot of money on the maintenance capex. So freeing up those assets, will it lead to improvement in our depreciation, leading to better free cash flow? That means leading to better reinvestment at a higher ROE, ROCE. What is your view from how it will look like next 2 years, 3 years down the line?
I think okay, sorry. Can I understand your name, please?
My name is Saurabh, sir. I am from Scientific Investing.
Okay. Saurabh, in fact, I think in the last 2 phone calls also we were talking, the ROC was 14%, which ourselves has kept the target to reach 20% in the next 3 years' time. So you have seen, as I mentioned in my call also, that ROC, which was 14%, is increased to 16%. So we are ourselves targeting to increase by ROC by 2% every year, and that is possible by way of a increase in the margins, reduction in the working of the cycle time, and increase the productivity. Now, you are talking about the maintenance capex. You know that capex for the last 5-6 years, even more than 7 years, was in the range of 200 crores, which has been reduced. And now, I am targeting almost around 60 to 70 crores capex goes for the maintenance, because we are a more than 35 years old company. So to maintain the cost under control, to get the productivity, we have to upgrade the equipment, automation, re-engineering is time to time required, because otherwise labor cost will go up. So that at every of the year, the depreciation amount, which earlier was around, I think, 160 crores, which is now reducing trend you will see in the period ahead, because most of the equipments which are expiring within the period of the life of the assets. So we are replacing by the new assets if required. Otherwise, the depreciation, out of the depreciation, you see my maintenance expenses is the 50% of the depreciation amount only. And the balance is for the value-added expansion, which in the last 2 calls also I mentioned, the expansion major capex will go in the value-added products, which includes the CNG and the hydrogen, which is the main, where the value addition margins are high and the cycle time is less. So we will be able to increase our ROCE. That is our main target and focus. Addition to that, we are focusing continuously, improving margins. At the same time, we would like also to have a debt-free company, and that's our internal target. In the next 2.5 to 3 years, we will be debt-free.
Great, sir. Great. And I must appreciate the efforts you are putting in. And, sir, for this 15% growth rate, like, what are the things which can go wrong if we talk in terms of risk? Like, if it can go wrong for 1 or 2 big reasons, what it could be?
If you ask me percentage-wise, I will give the 9 out of 10. Chances are very 10% less, because the product which we have selection is a high productivity, and government also have to meet their target, because we are following the government policy. And you and we all are very well aware that this BJP Sarkar is going to come in the might, and that policy for next 5 years going to be continue. And our what? We are doing our expenditure for the based on the policy market, size of the market. You know that composite product market itself is a 28,000 crore. Hydrogen diesel market yet to take under the our working, which we are not yet considered, because it is the development stage. And now other products, packaging which we are there, we are considering growth in the range of 10 to 12% only. But we are expecting more growth in the product where the government initiative is also there in the green energy.
Great. Great, sir. My best wishes to you. Thank you, sir.
Yeah, thank you.
Thank you very much. The next question is from the line of Varun Arora from Safe Enterprise. Please go ahead.
So my questions are around CNG Type 4 cylinders. So if you could, let us know your expectation of growth from CNG Type 4 cylinders next year, given the capacity expansion that we are undertaking.
I think I have mentioned in my CNG composite cylinder, we are incurring the capex of 125 crores for increase the capacity from 480 caskets to 1080 caskets, where we can generate revenue in the range of 850 crores. As far as this current year is concerned, FY2023-24, we are achieving 350 crores. We have a current capacity limitation. So composite product, LPG CNG to put together, we are achieving this year in the range of around 500 crores. But definitely next year, it's around 800 crores we are projecting, because we will get some contributions from the expansion of the activity in these caskets business, and by way of expansion at the new locations. But if you ask me 2 years down the line, definitely composite products, which is currently 300 crores, we are targeting in the next year's time, it should reach to 1,500 crores.
Sir, and in the CNG cascade opportunity, are we seeing competitive intensity picking up? We have noticed that there has been entry of some new players. So if you could give some color, if you are seeing competitive intensity picking up, and whether in the orders where you are bidding, are you still kind of winning 100% of orders where you are actually bidding? So if you can comment on the competitive intensity. And in that light, sir, if the competitive intensity will pick up, do we expect to keep our margins, which are around 20% in this business? Do we expect to keep those margins?
Thank you, Varun, for your question. Admittedly, I must tell you that the level of technology that we are into on composite cascades has been on the Type 4 technology, which has been the latest that is available globally. Whatever we have seen, a little amount of competition has been on the basis of some imported cylinders which have been one rung lower, that is on Type 3. The local manufacture is mostly around the Type 1, which is about 4th generation behind as far as the technology is concerned. So whatever competition is building up is mostly in the Type 1 cascade where they are fighting for the steel cylinder part of the pie. When it comes to the Type 4 cascade, they are far more economical in terms of the model, in terms of the application. They are far more rigorous in terms of the pressure applications that they are at a different level. So we are in a position to justify these investments and be able to, be head and shoulders above the rest of the players in the field.
Sir, is it fair to say that wherever you are bidding, you are winning 100% of those tenders?
I would say to a large extent you are right, but in some cases maybe there is a split that takes place between us and the small imported components might be, but that is very small. We are in a position to say that we are able to garner a good share.
Okay. My last question, sir. In the previous calls you have spoken about the addressable market for Type 4 CNG cylinders. And in those calculations, you have assumed that whatever would be the incremental CNG cylinders, cascades, 50% incremental share would be for Type 4. Are you, so this 50% number that we have taken, the assumption, have we seen that in last 6 months? So, for example, whatever CNG cascade requirement that would have come in last 6 months, would Type 4 cylinders be kind of meeting, 50% of that demand?
Yeah, I think so. We are more or less in that time gap because slowly and steadily the influence of the Type 4 cylinders is also improving, and especially with the new expansions that are coming up with the CGD players, mostly they are settling for the higher level of technology, and that gives us a better share as well.
Sure. Thank you so much. Best wishes.
Thank you, Varun.
Thank you very much. The next question is from the line of Ankur Savaria from Savaria Foods. Please go ahead.
Good evening, everyone, and I really congratulate you for the excellent set of numbers. My question is regarding the disinvestment. I'm still not clear about, in the last Concall you said that out of 3 regions, 2 of the regions are in advanced phase of disinvestment, and that should be done by the month of January. And third, you were hopeful that it will take place in the month of March. But what you have said right now is that 50% is being disinvested from the MENA region. So what is the complete picture out of the disinvestment that we were looking out for, sir?
Ankur? Hello?
Yes, sir.
Yeah, Ankur, you are right from your review. I mentioned that we have 3 continents, US where we do 20% business, Southeast Asia we do 50% business, Middle East we have a 30%, that is also in 2 parts, Middle East 27% and South Africa 7% called Egypt, so 30% Middle East region. But now what happened? With the grace of the God, third happened first. So balance 3, they are not closing, but we will see as per the guidance of the management, if we get our price, if we get our expected valuation, we will think on that and we will take the approval from the board. You know the international and global situation where whatever is going on and disturbances there all over, cost of the funds have increased in the US market and everything. But I am pleased to tell you, all the units is earning. There is no any compulsion for me. You have also seen for the debt reduction, which is again management target is there. So we have identified 125 crores value of the assets, which already disposal positions have been started, and we are completing that also in the next financial year. So right opportunity, if we get our valuation, we will consider that. Otherwise, we have no any desperation for setting up any of the business. But this we got it, good partners. With the 50% only, you see, we were talking about 80%, but we are now agreeing for 50%.
Yeah, sir, I am also of the point of view that it is not necessary that since we are doing so great, it shouldn't be a desperation for us to sell the business at a lower
No, Uncle, we are not going to do it. We know very well what is the valuation I'm getting here and what is the valuation I'm going to get from overseas. Because of the 6 month or 12 month or 18 month incident and geopolitical situation arising in the country, we are not able to sell our business desperately or any kind of this thing. We'll see our right price, then only we'll see. Because as a promoter, we are also 51.6% partner.
Right. So as of now, the thing is that we are right now selling 50% of the Middle East business, and rest of us, we are still in the advanced stage, as you said earlier, right?
Don't take it as advantage stage, because we are already close calendar year 23. We will again talk on the new chapter. Old chapter is closed. We'll take the new chapter based on our earning estimation of 2024, because when we are growing 10 to 12%, so nobody can, and we are not for sale for the 21 or 22 EBITDA basis. The new chapter will open now. Syllabus has been changed.
Okay. And
you know, CA always syllabus change.
Absolutely right, sir.
New exams, new papers.
Okay. The second question is regarding one of the company name as Confidence Petroleum. They have recently said that they have also ventured into Type 4 cylinders. So, is the technology something proprietary to us, or anyone can open the same business that we are in, sir?
With due respects to the company's name that you mentioned, the technology for Type 4 cylinders is not available very easily. You know the background that we've been in Type 4 cylinders for almost more than about 15 to 20 years now. Since the time we acquired the company for manufacturing LPG cylinders, we've been doing this business for that long. Over a period of time, we have, kind of graduated from LPG cylinders to CNG, and then we are looking at hydrogen very confidently. We've been able to tie up a lot of technology partners as well. I am personally of the opinion it's not that easy, but anybody who wants to attempt it, we do not wish any ill will.
My last question is regarding the oxygen cylinders. Sir, have we able to get any concrete orders, say from defense or any other company in India?
Uncle, you are talking about the oxygen cylinder, right?
Yes, sir.
I think in last call also I mentioned I am order book for the LPG cylinder itself is full. I will use the oxygen cylinder supply when I have a capacity remaining is there. So we have got the approval looking into the future, but in fact we have started our registering process with the Army and Navy authorities. The process is on. We have appointed consultant who is completing the formalities. You know, any government authorities, the formality of the vendor registration itself is 6 to 12 months, and the approvals takes time.
Yes, sir. And that was from my side, sir. One thing more. Last week I saw the LPG cylinder manufactured by Time Technoplast in Lucknow, and I was really, really happy to see it, sir, as if it was from my company.
Nowadays, the wide distribution channel, IOC is also now encouraging and giving the good understanding, good education to the every society. So use of that composite cylinder, lightweight cylinder increases, usage will increase.
Yes, sir. Thanks a lot, sir, and all the best in future from my side.
Thank you. Thank you.
Thank you very much. The next question is from the line of Mahesh Muralidhar Borase from MB Associates. Please go ahead.
Congratulations, sir.
Thank you, Mahesh.
Doing extremely good. And with this Varun, Saurav and Jatin's questions, actually all my queries have been answered. I only wish you all the best. And as investor, I think I should be benefiting from your company. Thank you, sir.
Thank you. Thank you, Mahesh. This, your work itself is give us the more strength to do the more work.
Yes, God bless.
Yeah.
Thank you very much. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Hello, am I audible?
Yes, sir.
Yeah.
Yep. Thank you very much, sir, for this opportunity. So first up, I think you mentioned this overseas disinvestment revenue is 350 crores at 13-14% margin, right? That entity?
Yes.
Oh, okay, fair enough. And I mean, when we say we are looking at 15% CAGR in terms of top line, so how much growth we have factored in that in terms of value added, and how much growth we have factored in established product?
Oh, in composite product, value-added products, we are considering growth projection 30% CAGR, especially in composite products more. And the established product, we are taking into consideration 10 to 12% growth. But in that also, in established products, if you ask me the packaging products, it's around, I can say 10 to 11%. But especially PE pipe product, government initiative in infra businesses. So we are considering growth of 25% in our PE pipe business. Because you know very well last year, the pipe business was hardly 200 crores because the COVID effect was there. But now this year we are taking on the projection of 260 crores, and definitely at least for next 2 years we will grow around 25%.
Okay. So 25-30% CAGR growth in your value-added product and 10-12% growth in your established product.
Combination you can take it around, it will be around 15 to 17%.
Coming at 15 to 17% CAGR, that one can assume for next 2-3 years, right?
Of course. Visibility is there only. As per the order book positions, government initiative, and everybody is hoping that the same government will continue at least for next 5 years.
Fair enough. And given our value-added product has much higher margins as compared to your established product, so a share which is currently at 27%, so ideally it per year, based on what you are saying, per year it should increase by 3 to 4% per year for next 2 to 3 years. Like it can go from 27% right now to 35-36%.
You are right. If you ask me the 3 years down the line, it will be around 64% established product and 36% value-added products.
36% value-added. That is also coming as per my calculation.
And that will give the substantial EBITDA margin increase, which is currently 14% to 16% can go up.
So 14% to 16% EBITDA margin in next 3 years, right?
Yes, you are right.
So that is by FY27 we are targeting.
Yes.
14 to 16% EBITDA margin.
Yes. You will see this year also there is a bit of expansion of around the 70 basis point.
This year you're talking about which year? FY20?
FY24.
24, yeah, of course. We are already seeing EBITDA margin expansion of 70%.
Yes, the similar will continue as the percentage of value-added product will increase, they will come.
Fair enough, I got it. And now coming on to the debt side, when we say that we are going to receive this $25 million, so that is that value we are saying for that 50% we are disinvesting, right?
Yes, 50%, $25 million. It is roughly we can say around 200 crores. 200 crores. And maybe the net of this everything, taxes and everything, maybe around 175 crores. But that entire thing will be used for the, as I mentioned to you, for the debt reduction and benefit to the shareholders. That we will decide on receipt of the consideration. And otherwise, the expansion of value-added product is ongoing as the company has adequate internal accruals available to take the expansion in which is already finalized.
Correct. So this 175 crores net on a net basis and plus 125 crores also you expect to realize over next 6 months on non-core assets?
No, it will take, I can say, because it just identified the last quarter only. Out of that, one transaction is already agreed. Balance, internally we are keeping target to make it zero by March 25.
By March 25. So by March 25, what should be our debt target?
If you ask me, we don't do anything this investment further, and I will do the realization of these profits for this thing. At least we can reduce from 800 crores to around 400 crores.
How much?
800 crores to around 450 crores.
450 crores. So that's a significant debt improvement, right?
Of course. That will give the benefit of the interest cost, which is in the range of 100 crores, will go down to around 50-60 crores.
50-60 crores. Yeah, that's what I was trying to understand.
Yes, you are right.
We can expect 50-60 crores interest cost for FY25 as a whole?
say the interest cost because it's inclusive of the non-fund facility cost also, because we are in the government tendering business, especially in composite products and multinational companies where we need to provide these performance guarantees for a certain period of 2 years, 3 years, 5 years. So we consider around 15 to 20 crores expenses on account of the export documentation and the bank guarantee commissions, LC commission, etc. So even though we will debt-free, but at least 25 to 30 crores expenses will continue considering the size of the revenue of the company.
So 50-60 crores plus 20 crores. So ideally 70 to 80 crores.
No. Overall, I told you, if it's 800 crores debt, the cost of the funds 80 plus around 100 crores are there. 100 crores will go down to 50 or 45 something. So around 60-70 crores cost we can expect for next year.
60-70 crores. Fair enough. I got it. It's very clear, and I think that's it from my side, sir. I think fantastic result and all the very best to you. Thank you so much.
Thank you. The next question is from the line of Rikesh Parekh from Rockstud Capital LLP. Please go ahead.
Yeah. Congratulations on a good set of numbers. Sir, the first question. So first question is with respect to divestment of this 50% stake. So does the contract entail in 18 months or 24 months we'll be selling the residual 50% by any chance?
No, it is at least because the investor has come out, at least we'll see, because it's a 50% we are selling, balance 50%, the management we will continue, and we'll see in the next, at least we will continue to run at least for 3 years. We don't require at all, because you know very well, India and the Middle East relationship is increasing. You see how many times Narendra Modi has seen the Saudi and Middle East countries, where the good expansion opportunity is there. We are taking the partners locally because we can grow faster. Even presently also we are growing 10 to 12%, but we want to grow faster, 18-20%. That is possible to do the faster expansion in the Saudi especially, where the good demands are coming, new chemical companies are coming.
Okay. And right. Sure. And just an extension to that, so our current revenue mix is between established and value add is 73-27. So this being traditionally being an established product, so that it will change to that 70-30 kind of a thing if I exclude the Saudi 50% stake as such. Is the understanding right?
It's a very small, I tell you. As a 350 crores revenue for 3 countries, which almost is a 50% selling point, means 3.5% of the total revenue. 3.5% of the total revenue is 200 crores only. It's a very negligible in terms of the overall total turnover of the company. So it is not giving the much effect in the revenue part is concerned, profit part is concerned. But I again tell you, I think in the last call, somebody has asked me about this regarding the value-added products and the established product business. I mentioned in the 3 years' time, we are estimating 64% establishment business, establishment products, and 36% value-added products in the next 3 years' time.
Sure. Yeah, definitely. And secondly, just wanted to understand that we have a multiple registration or regarding you answered a part about the oxygen cylinder. For CNG, we were doing in a tie-up, means we are working with some auto company. So any progress on that, whether it is approved or something?
I think approval is already there as far as the automotive industry is concerned. Currently, we are not capturing because we have already some value-added products are available, which is a cylinder plus entire set. So we are selling currently as a complete cascade. Definitely, automotive industry, lot of things yet to be done, because presently entire industry is using the metal cylinder for the CNG application. So we have approached, our process is on, because process and approval is already there for 60-liter cylinders. They have a capacity limitation, therefore we are not capturing that market currently. But definitely after the completion of this expansion, which is going to be completed in this financial year itself, we will definitely explore the possibility and we get the business from automobile industry.
Okay. And sir, my last question. So we were exploring some negotiation in MENA region. So right now we are not dropped and means we'll be renegotiating. Is the understanding right?
No, MENA region.
Southeast Asia.
Middle East and South Africa. So
Southeast Asia.
Southeast Asia, as I mentioned to you now, the syllabus has been changed because we have already closed calendar year 2023 with the good result. So we'll see, we'll talk again. If we get our expected price, we are not desperately and we are not desperate to sell of that business.
Okay. Thank you. That's it from my side.
Thank you.
Thank you. The next question is from the line of Dolly Chaudhary from Niveshaay Investment Advisors. Please go ahead.
Hello. Sir, thank you for the opportunity and congratulations on a great set of numbers. I had a question specifically regarding the IBC segment. So I just wanted to know after the whole restructuring happens, so what will be our capacity by that time? Because I believe that some part of IBC we also do overseas. So what will be the capacity after restructuring?
Restructuring is what is not negligible because currently if you ask me, I have a IBC, complete IBC and IBC bottle manufacturing. I have a capacity all put together 1.9 million pieces, which includes overseas 1.4 million, India 0.5 million. Overseas 1.5 million, which we are talking in the Middle East, we are manufacturing in the Middle East only, and that is a very negligible 50%. Capacity is 100,000, so it is affect hardly 50,000 IBC. Means that is also not affecting. I am telling you, we are selling only 50%. It will come 100% revenue, and 50% we will include in our revenue. So it is negligible effect because IBC is the major business of IBC in US and the South Asian countries where our business are continuing.
Okay, sir. So this is like 0.5 million is in domestic business side.
Instead of 1.9 million, it will be 1.85. Nothing. Negligible effect. 500,000 only.
And like, are we planning to expand in some 2-3 years the IBC business?
Yeah, that's of course is there. Already we have expanded my subsidiary company Technoplast. Last quarter, they have completed one expansion project for 180,000 manufacturing capacity increased in Dahej. Another also expansion plan is there, looking to the requirement of the regions.
Okay, sir. How much growth are we projecting for the coming 2-3 years, let's say?
In fact, IBC projections we are taking in the range of around 15% we are taking, being the export from India is increasing and bulk packaging is increasing compared to because it's very clear IBC is replacing some kind of the metal drum business and the plastic drum business. Because in 5 drums, they can handle the one IBC. 1 drum 200 liters, 5 drum 1 ton is equal to the one IBC. It's a 1 ton material. So if you ask me, packaging, plastic drums and jerry cans are growing 8 to 10%, but if you ask me the IBC, it is growing around 15%.
And India, we have a majority of market share, right?
Yeah, of course. Even wherever we are manufacturing IBC, out of 10 countries, in 7 we are leader. US we are not leader because very, very big manufacturers are there in the US.
Okay, sir. Thank you. That will be all.
Yeah, thank you.
Thank you. The next question is from the line of Jayesh Gandhi from Harshad H. Gandhi Securities. Please go ahead.
So I heard you talking about your intention to take ROC to 20% in next 3 years.
Yes.
And then that one of the parameters which you said is reducing the working capital cycle. So if I was just looking at your last 5-7 years of data, looks to me like we were closer to 100 or below 100 in working cycle. And currently we are at closer to 140 or something. Are we thinking of moving down to 100 or will not be able to do that?
No, it is there. In fact, if you have, I think you were there or not, when I have given my brief about the presentation, I have mentioned very clearly the working of the cycle time, which was in 2023, last year it was 112 days, which I am targeting to 90 days. If you ask me, even though I have not required 9 months, but if you ask me for the quarter, it is in the range of around 102 days. It is also reducing more. But again, ROC is not only increased by way of working of the cycle time. ROC will increase by increase in the percentage in total business of the value-added products, right? And increase in the overall EBITDA margin percentage basis. That only will increase the ROC.
I get it, sir. And,
right?
So one more thing. Since I'm new to the company, I actually wanted to understand the opportunity size in composite cylinders, that is LPG, CNG, and oxygen. If you can shell out 2 minutes on that.
I think if you want to understand more, you are welcome to my office. But in short, I can say we are in composite products. We have LPG cylinder. Capacity is 1.4 million. Sellable capacity 1 billion cylinder, where my utilization is around 90% is ongoing, and we are doing export as well as local supply to the gas distribution company. Now, as far as CNG is concerned, we have a current capacity of 480 casket manufacturing. I am considering 60 cylinders in one casket. If you ask me the number of the cylinders, that is around 30,000 cylinders. Now, my expansion for 680 caskets with around 40,000 another cylinder is going to come this year itself. So my casket business will be expansion in terms of the casket will be 1,080, where we can generate the revenue of around 800 crores around. So 800 crores plus 200 crores, 250 crores from LPG, 1,000 crores from composite product we can do. Now the oxygen cylinder, there is no any separate capacity. It is within the capacity of LPG we have manufactured and developed these products. And we got the approvals, but other process for the Army, Navy, government process is on. So whenever, if in the future we got ourselves is ready, if the future demands come from the oxygen cylinder, we can supply that. I think somebody has asked me previously why we are not expanding in the LPG. Because currently we are supplying to government and some private gas distribution company. You must have seen the ad in nowadays, Go Gas, which is the confidential petroleum company. They are putting the edge, Go Gas is the lightweight, explosion-proof cylinders that is coming on every day. I have also watched the same TV. You must have seen the red color cylinder. That is manufactured by us. We are supplying to team, supplying to them as in demand they comes. Now, the LPG, some private gas distribution companies are using. In government company, IOCL is using. Now we are expecting some kind of the good business from the other gas distribution company, that is BPCL and SPCL. Then only we will think about the expansion plan. But currently, in our expansion plan, we have a CNG for the gas distribution industry, plus CNG cylinders for the automotive industries, and another thing, for the CNG cylinders for the automotive industry, which is a very large market currently. As the infrastructure, new gas stations are developing and expansion is there, when the availability of the gas will be easy, then the further sale of the, you must have seen, sale of the CNG gas cylinders are increasing day by day, and every gas station company is increasing the gas station. If you go through the policy of October 2020, the business potential is around 12,000 crores for 8,000 new gas stations allotted by the governments. Right?
Helpful, sir. Helps. And so one last question is, can you define our market share in LPG or CNG currently?
You ask me LPG, if you ask me market share, who are the suppliers? We are the suppliers and other partners, Supreme Industries, there we are the two only in the LPG. But I just give you the data. LPG cylinder, for number of the years, you and we are all aware that the metal cylinders are in popular. 40 crores cylinders are in population. 40 crores. Considering the life of the 15 years, every year 2 crore cylinders are required by the government companies and private gas distribution companies. Against that, ours and Supreme capacity is hardly, we can say that 2 million cylinders, which is the 10% of total capacity. So market is very big. Only just replacement takes place. I tell you our experience in polymer drum. If you go back to 30 years back or 35 years back, 100% metal drum was in population. Today, 60% drums converted from metal to the polymer drums. It took 30 years. So similarly, whenever we are considering, apart from gas line, government is also planning to give the gas connections, but it is gas connection pipeline is possible, economical in the high-rise building. It's not economical in the villages, it is not economical in the small towns, because cost of the laying is very high.
I get it, sir. And how about CNG, sir?
Pardon, please?
And how about CNG? The market
so CNG, still I am trying to collect the data. How many metal caskets are already in the market, but I could not get. I am asking every company who are getting in line. But just I have seen some of the paper cuttings where somebody is telling we will grow by CNG caskets by 15%. We'll do because every automotive sector is growing by 15%. There is no issue because we tried ourselves to collect the data. How many CNG caskets of the metals are available in the present market condition, we could not get it. If anybody who is hearing on the call, if he has, it will be good use for us. They can share with us because you must be attending call of many companies.
Sure, sir. So if I get it, I will share it. Thank you very much, and
thank you.
Best of luck for future.
Yeah.
Thank you. The next question is from the line of Priyank Parekh from Abacus Asset Managers LLP. Please go ahead.
Yeah, thanks for the opportunity. Am I audible?
Yes, sir. You're audible.
Yes, sir.
Yeah. So we have during this quarter we have seen very good growth in the packaging product and the IBC business. So my question is around due to the geopolitical issues and dumping of Chinese product in India, the chemical sector is facing a headwind. So just wanted in that context, how we are able to grow this well during this quarter.
Just a minute, my partner Raghupati will answer you this.
Sir, as we know that China is facing headwinds, we are also in a position to experience a good amount of buoyancy overall. Multiple reasons are, can be attributed. Overall, we are also in a position to see that there are enough people who are looking at options to China in terms of, an optional buyer, and that is where the chemical industry is also be in a position to really experience that kind of shifting of the demand that could be really be seen. Secondly, overall, the growth in the Indian industry is also for everybody to experience. As the infrastructure industry is also growing very fast, there are lots of other couple industries also which are, investing and growing. The overall growth for the packaging industry also is keeping pace with these demands. So we are also in a position to experience this buoyancy not only in India, but in even the geographies that we are in, whether it is the MENA region or whether it is the East Asian region, both the geographies are also doing extremely well.
Okay, so rather than the headwinds, it is a tailwind for us. That's what you are trying to convey.
Yes, that's right.
Okay, got it. Sir, on the capex side, you said that initially we were targeting some 200 CR of capex during the year, but now that has been revised to 175 for this year. So just wanted, are we postponing some capex to next year, or is just we can achieve the targeted capacity with a lower amount of capex? So how would I interpret it?
No, I think you can consider yearly capex because once this year it is estimated more because of the value-added product expansion of the CNG and hydrogen was ongoing, which in fact we had anticipated it will come in this current year itself. But looking at the current progress of the machine and progress of the equipment, we expect it will go to the next year. But it does not mean that next year it will increase to 200 crores. We ourselves, I think, as I mentioned to you, we can take around the 70 to 75 crores on account of the maintenance, automation, re-engineering to maintain the capacity, to maintain the cost under controls for molds and everything. And balance expenditure, we'll see time to time value-added product. If you ask me the next year, if net of the capex will be, I think, less than 100 crores because we will get the sale of the assets also which is there, around 125 crores. 25 crores sale is already under completed 100 crores, which ourselves keeping the target for next year. So net assets increase will be less than 100 crores.
Okay, net of the receipt we are going to get.
Yes.
Okay, got it. On the conservative side, I got your guidance about 15 to 17% increase for next 2 to 3 years. But if everything goes right, are we aspiring for higher amount of growth, considering the good growth in this quarter?
No, I think growth 17 and 18% we got it. As I mentioned, you are aware that we got first quarter 22% business, second quarter 24%, third quarter 26%, fourth quarter 28%. Right? This is our business normal scenario for the last 10, 15 years. Like that everybody has to target, and government companies, Indian companies, like that we achieve that business. Especially this year, quarter on quarter is also high. But as I mentioned to you, overall growth, combination of the composite products and other products, if you have heard in my somebody has asked me about the growth plan, I told very clearly, packaging product and other products, we are considering growth in the range of 10 to 12%. Composite products, we are considering growth of around 30%. So combined growth, at least 15 to 70%, we can take, looking at the current scenario, at least for next 3 years. Thereafter, hydrogen cylinder, which we have not considered, only the trial testing approval part we have taken for expenses part is concerned. But we will estimate the demand only on the after approval of the products, and after we will come back when we will do the revision in the next year, the growth plan, then we will able to tell you. At least visibility currently for the next 2 years is there.
Okay, sir. And sir, if I can squeeze in, I missed the IBC bifurcation between the domestic and the outside of India side. So can you just repeat it once, sir?
Yeah. The IBC means intermediate bulk containers, complete IBC. Then there is the first part, IBC complete when we have a intermediate bulk containers bottle. That is called the bottles IBC, which is required the part of the product. So we considered first product is the IBC bottle manufacturing capacity. We have a 1.9 million, means 19 lakh की capacity है, India and overseas मिला करके, जिसमें overseas में capacity है 14 लाख की और 5 लाख की India में.
Okay.
If you ask utilization, I'm asking you, still lot of rooms are available. My utilization overseas across the geography I take together, it's around 60%. Still there is too much gap is available to achieve the target. And in India, it is around 75%.
Yeah, so in terms of the sales amount, that also holds true for the sale amount as well. Is it correct to assume, sir?
Yeah, sales will also grow, because I tell you, IBC is the various components.
The bifurcation part, sir. So we are doing some 566 in the last 12 months, the IBC business. So the business coming from the outside India part and India part is the same proportion that you mentioned for the volume, right, sir?
No. Little percentage of the overseas is more because capacity is more there. Almost, if you ask me the realization point of view, it's a 60% or 40%. 60% overseas IBC business, 40% in India.
Okay, got it, sir. Thank you for detailed answer, sir. And all the best for the coming quarter. Yeah. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
First of all, thank you very much to all to listen carefully and understand and asking about in fact, we get more strength from you when you ask people so many questions. We keep ourselves ready and we always valued our investor because you meet so many people and we are looking after our business in surrounding area. Thank you very much once again. Thank you.
Thank you, members of the management. Ladies and gentlemen, on behalf of Phillip Capital India Private Limited, that concludes this conference. We thank you for joining us and you may now disconnect your lines. Thank you.